Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Looking at SPY, IWM, and QQQ, the bulls continuing strong, the highest close we've ever seen in the S&P 500, but we didn't get a new all-time high here on SPY. We are short by just 5 cents. Inside bar on the daily time frame, certainly a strong close. If we do see a break, we'll be looking at 251 as the next resistance, and the bulls will continue to prove they're in full control. So looking at the higher low pattern on the daily time frame, if you look at this on the hourly time frame, it will be a very clear higher low pattern that needs to be maintained for the bulls to keep this full control. So on any pullback, as long as the hourly higher low pattern remains intact, the bulls have full control. Weekly time frame closing right up by the upper Bollinger Band, 250.80, and we'll see where we close tomorrow relative to that level. We've closed just below it 3 weeks in a row, and we're on the verge of this bullish MACD cross as we are continuing strong. IWM, a new all-time high. This now makes 5 days in a row. Tons of strength, tons of volume, and this is the strongest I can ever recall seeing IWM, at least in the recent past, where it's blowing away SPY and QQQ over the V-shaped recovery over the past 5 weeks. So huge follow-through. And nice higher lows and higher highs here as well. If we lose the upper Bollinger Band support, we will look for normal healthy consolidation to begin on the daily time frame. And the same thing here, anything on the hourly time frame, we want to keep that 20-period hourly moving average support. And if we lose that level, that's the first red flag for this really strong uptrend. On the weekly time frame, we are breaking out well above the upper Bollinger Band. You can see the last time we saw this was back in November 2016, this kind of strength and breakout above the upper Bollinger Band. And seeing this move again in a very strong close. Again, look at where we've closed on the weekly candlesticks in 5 of the last 6 weeks. It's right up at the high, showing that momentum. QQQ inside bar on the daily time frame. So a strong bounce to a degree, but now we have to see continuation. We have the 50-day moving average as support. It was resistance for 2 days. Now it's support for the past 2 days. The middle Bollinger Band resistance is curling down at 144.93. And it's an inside bar. So if we see a bull break of 144.56 and a bear break of 143.78, and we have to get over that middle Bollinger Band for the bulls to be looking good back towards the all-time high. So we have seen a pretty solid bounce in the tech sector, but compared to where we came from with that weakness last week and to start this week, there's still definitely work for the bulls to do. The weekly time frame, clear higher low, bouncing above the middle Bollinger Band, bullish candlestick. So the weekly chart looks just fine, and when we do lose this higher low pattern on QQQ, it will be very clear, and it will start with the loss of the middle Bollinger Band, and then we will lose the higher low pattern, which at this point, not at risk of doing. So that's what we've got heading into the end of the week. Lots of strength out there. Markets are on absolute fire. We had Trump, and he announced the details of the tax changes, and we'll see if that passes, and that's certainly what the market has been going on since his election in 2017. Most significantly, the promises or of the potential of the corporate tax cuts and all the benefits that it could have on the market. So I've actually talked to people, I don't usually get political, but I've talked to people who are not Trump supporters at all, but they've talked about how, you know, it's reflected in their retirement accounts and things like that, and they might have to vote for them next time around because of what the economy is doing. So I have no opinion on the matter. It's just relaying some interesting mindset of the average American out there and what the impact is on this market. So I hope you have a good night, and we'll see you over the weekend.